Welcome to Second Take, the show that focuses on the issues behind the news. More than a third of the yearly gold production of Pan-African Resources is destined to arise from low-cost, low-risk tailings businesses. It was revealed at the company's results presentation this week. Martin Creamer attended and has a story. Welcome, Martin.
Thanks, Sashnee.
Now, Pan-African Resources expects to produce more than 190,000 ounces of gold, in its 2018 financial year. Can you tell us about this?
Yeah, I think it's going to be 190,000 plus, because I think they're on a growth path at the moment. And it's a great mixture because you've got the underground workings, both in Barberton and Evander, but you've also got the surface workings in those two areas as well. And when you look at the all-in sustaining cost of some of those surface workings, it's absolutely mouth-watering. It's probably among the best in the world because it can get down to the level of, $350 per ounce. So that sort of all-in sustaining cost on the surface level helps the underground because the underground costs are normally more expensive. And if you look at their target now for the group as a whole, they're targeting all-in sustaining costs below the $1,000 an ounce mark. And that is all because of their brisk and vibrant activity in the tailings area. That was for long dominated by DRD Gold, which has been out at Ergo, but you can see some of the other companies now taking strong advantage of the fact that this material that bears gold is on surface, and if you can access it and use the right technology, you can get those ounces out at very low cost. And then if you aggregate everything with your underground, you can bring your total cost down very attractively.
Now, can you tell us about the company's 1.7 billion rand gold tailings project, which is now under construction?
Yeah, this Coulee project is really exciting that company because it's probably going to add another 56,000 ounces and low-cost ounces below the $550 an ounce level. So again, it is volume now coming through with Coulee. We've had the Evander tailings project and the Barberton tailings projects, which have not as much volume as that. They're in the 20,000 ounces a year level. This is going to be at 56,000 ounces, and it goes on at that level for 8 years, and then for the final 6 years, slightly lower. But you can see that they are realizing the huge advantage of turning your surface assets to account, and very happy with Coulee. And you can see that their shareholders came in and funded this with quite a lot of alacrity, and so did the banks with debt. So people can see that this is a project that is not only going to produce low-cost ounces, but is going to pay for itself very, very quickly.
Now, Pan-African is poised for growth and has proposed a 185 million final dividend. Can you tell us about this?
Yes, so the gold price has been a bit flat for them throughout last year, but they now have built into the core of their business the payment of dividends. They want to do that. They want their shareholders to expect that. And although this dividend isn't as big as it was when the gold price was better, they're still showing their market, showing their shareholders both in London and South Africa that they will be paying dividends, when they've got cash available to do that. And that is a proposal that they've made. Of course, it's got to go through the annual general meeting in November before it gets declared. But the board has proposed that they declare this dividend, which is a pat on the back for the company, able to still propose dividends at this stage when it's very active growing. So you might imagine the shareholders would say, look, rather put this into growing your business, but they want to have that DNA which says we also pay dividends, which I think consistency in that is going to earn it marks and points from shareholders. And the CEO Cobus Lutz made it clear, very patently clear, that he's there for all the stakeholders. And I think he also made it clear that because they had to do big repairs at Evander mine in this last period, the 12 months leading up to June 30, so their financial year, 27 financial year, they had to close the operation for 55 days. Which meant that their production was lower, and then this has a big impact on unit costs. And he was just saying how seriously the management take this, and how they want to make sure that they come out of this period where they were slightly behind on their targets and really come forward this year, not only with these growth projects, but on the existing operations, making sure that they fire on all cylinders and that they can hit this guidance level, which they've described as 190,000 ounces, but they put a plus next to it. So I think they're optimistic that they will hit that target.
Thanks for speaking with us,
It's a
Martin.
great pleasure, Sashnee.
That's it for today. Join us again next week for more news analysis on South Africa's mining industry.